everyone, thank you for joining us once again here at See Freedom Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing we just want to review over the updated or second estimate of the third quarter GDP which came out last week. Overall, we had a positive report. GDP increased by 3.3% over what we had earlier released at 3% in the advanced release. So that's overall, that's a positive number. However, when we start to break down into those finer details and looking at the different contributions from the different sectors, then we start to see some weakness kind of appear in here. So when we look at the overall change from the advanced release to the second estimate, we can see that the consumer segment, the contribution came down just 2 basis points from 1.62 to 1.60. So that was a detraction from the advanced to the second estimate. When we see the investment portion, though, we saw that pick up. We went from 98 basis points up to 1.2% or 120 basis points. So we saw a pretty big improvement in the investment sector, and we're going to dig a little deeper into that in just a minute. The government, we saw a pickup as well, went from a negative 0.02 up to a 0.07, so picking up overall 9 basis points inside the government segment. And then the exports imports net change there is a positive 2 basis points pickup. So overall we picked up 30 basis points when we're comparing the advanced release for the third quarter to the second release. So that in and of itself is a positive, but we continue to see this consumer segment move down. If we look back to the second quarter release for GDP, which was up 3.1%, you can see that fairly large difference between that consumer segment, where previously it made up 224 basis points of that 3.1%, and now we're just down to that 1.6, showing a little softness in that number in the third quarter. Hopefully, with the Black Friday sales that went on and the quasi-positive environment there with that sales structure during this holiday season, hopefully we're going to see this pick up a little bit here in the fourth quarter. But when we look at the investments quarter over quarter, we can see a big change going from 0.64 all the way up to 1.2% for the investments. That's a big change, and we'll look at that quarter over quarter change for that segment in just a bit. And then we look at the overall government spending going from that negative 3 basis points up to 7 basis points, as well as in the exports imports going from 21 basis points picking up to 43 basis points. We have about a 22 basis point pickup there. So overall a positive, but negative is that consumer segment. Continue to see we see improvements. They're just in the overall growth quarter to quarter. In the dollar numbers, we're just seeing that growth slow down. Looking at the investment portion, a little itemized here from the advanced to the second estimate. As we know, total from 0.98 to 1.2, that's a 22 basis point change. Made up 2 major categories would be the fixed investment and inventories. Fixed investment changing by 14 basis points. Primarily, we have that here in the non-residential. So these are the business spending, and that happened in the equipment. So we saw equipment really increase, and that's what pushed that forward. Residential, while detracting, it detracted less when you look at advanced versus second release for the third quarter. So that picked up 4 basis points, giving that overall fixed investments that 14 basis points pickup. Inventories just increased from the advanced release to the second by 7 basis points, not a tremendous push. but it did pick up a little bit when we look at the advance to the second. It's more interesting though when we start to look at the second quarter release compared to the third quarter 2017 second estimate. And we can see the big number for investments, inventories in here, moving from a 12 basis points up to that 80 basis points, providing an additional 68 basis points of contribution to overall GDP. So that's a pretty strong move. Inventories tend to be volatile. The inventories report that came out last week kind of showed inventories coming down a little bit and below expectations. So we'll see what happens as we move throughout the spending season, as we see in November inventories come in, and then December to see how that fourth quarter number, this fourth quarter GDP, will come in right now. But inventories is going to be a pretty major player in that fourth quarter GDP. So it's something to keep an eye on. When we look at the Atlanta Federal Reserve and their GDPNow, we can see when the revised third quarter GDP came out, it actually brought down that expectation of the fourth quarter down to a 2.7%. Like I said before, on the surface, that was a pretty strong GDP coming in at 3.3, but when we start to get down to the different components, we start to see some weakness arise in there. And that's why it kind of fell to a 2.7%. But then we saw this uptick here to a 3.5% when we start to see the construction spending start to flow out in information on the ISM index, pushing out as well some positive natures in the individual components, mainly the new orders and the backlog numbers, pushing that back up above that 3% level. So this is a positive that we're at 3%. However, this GDPNow is kind of volatile, and when we're so far away from the actual release date, so we anticipate this maybe to move down in here as we work throughout the fourth quarter in here. Thank you very much for joining us today. We look forward to talking to you next week about the jobs report that's coming out and other economic indicators as they filter out. Have a great week, everyone.